Hello everyone, and welcome to our yet another discussion on the solution for activity 1. And of course, this is part B of our solution. In this part B, we looked at the question in detail, and in part B, the examiner required us to determine the unit cost, to determine the unit cost for each product using activity-based costing. We have already covered traditional absorption costing, but maybe to take you back through the question, for those who may not have captured it in part A, just to take you through the question again. So in this question, in this activity, we have a company, Mukwano Limited, which manufactures two products, Nomi Star, Omo Jik, and the output and cost data for the month of January 2020 was given in this very nice table here. They gave us the number of units that were produced, in the month of January 2020. They gave us the machine hours, they gave us the direct labor hours per unit, the number of production runs for the month of January, and then the material cost per unit for each of the products. We are given additional information on slide number 2, and of course we are told that the overhead costs of the period were given as below. In our previous lecture, we have seen that the total of these overheads comes to 30,800,000. So the different line items in the overhead costs, we have the short-run variable costs, which are 3,008,000. We have the setup costs, which are 10,920,000. We have the scheduling costs, which are 9,100,000. We have material handling costs, which are 7,700,000. And of course, they proceeded to give us the cost drivers for each of those costs. And of course, for the short-run variable costs, we are told that the cost driver are the machine hours. The setup costs, the cost driver is the production runs. The scheduling cost, the cost driver is the production runs as well. And the material handling cost, the cost driver are the production runs. So this is going to be very important information for us to determine the activity-based cost per unit of each of the products. So of course we are given more information here that the direct labor cost per hour is 5,000 shillings. The direct labor cost per hour is 5,000 shillings. And that is our question. As I've mentioned, we have already done the part A of the question. Now we want to look at this very important approach, the activity-based costing approach. Moving straight to our solution. This is the separate sheet I have reserved from my solution. Of course, I'll begin with a very simple tutorial note here, plus the title. Our solution is a solution to activity 1 part B, Mukwano Limited. And of course, we are answering part B, where we are going to use activity-based costing method. So in the tutorial note, emphasizing that under this approach, the overheads are going to be absorbed to the 4 products on the basis of each product's usage of the factor driving the costs, which we have already discussed as cost drivers. And we're saying that under the ABC, the activity-based costing approach, the cost drivers are looked at as the factors which determine the size of the costs of those activities. And maybe to bring you up to speed, we mentioned that under the activity-based costing method, the costs, the overheads are allocated or charged to products on the basis of each product's usage of the factors driving the costs. So we continue by saying that therefore the product cost per unit are thus determined as. So of course we shall present our solution in some kind of tables and columns as we have done before. And of course in the first column I'll present the different computations for Nomi. In the second column I'll present the different computations for the unit cost of Star. In the third column I'll present the different computations for Omo. And then finally in the fourth column I'll present the different computations for our product Jik. And then in the last column we shall present the totals over there. All my shillings are in thousands. That is very important. All the shillings are in thousands. If they are dollars, if they are euros or pounds, you need to indicate, including the precision. Okay, so to continue, Of course, we have already discussed part of this solution, and part of it in regard to the direct costs. We have mentioned that for you to produce any of these products, you need to incur the direct material costs. So the direct material costs are going to remain unchanged. There's not going to be any change. Just look at the figures we have got in part A, where we have handled absorption costing. So the different figures we have obtained for direct material costs, we are going to maintain them. And that means that for NOMI, we are going to maintain the 200,000 because it remains the same. Star, that is 800,000, 2 million for OMO, and 8 million for JIC. And all of these in total, if you make use of your calculators, the total we get 11 million right there. Similarly, for the direct labor costs, they are going to remain unchanged. There is no change as per the solution we have got in part A. The direct materials are going to remain the same. That is the 50 for NOMI, 150 for STAR, OMO, that is 500, and JIC, that is 1.5. Now, the reason is that for the case of direct materials, there is no debate about this. There is no debate. And therefore, we are saying that the direct material cost will still remain the same in either of the methods. Whether you're going to use absorption costing or you're going to use activity-based costing, the direct materials and direct labor costs are going to remain the same. So the gist of the discussion under activity-based costing, which differs from the absorption costing approach, is on the overheads, okay? It is on these overheads, the way the overheads are charged to the different products. So the overheads, as we have, of course, as we have already mentioned, they are a big problem, and therefore they have to be carefully handled during the costing process. So let us look at how the activity-based costing handles the issue of overheads. The foregoing discussion on the previous slide, we have mentioned that the overheads are going to be charged to the different products following the cost drivers or the usage of the activities. And of course, the cost of the activities is determined by the cost drivers. The cost size, the size of the cost of the activities is determined by the cost drivers which have been given to us. So given the fact that we have different cost drivers for each of the overhead costs, it means that we need to determine an absorption rate for each of the overheads here. So beginning with the first, if you look at our question here, we are given different categories of overheads, and we are told that the different overheads that were incurred in the month of January 2020 include the short-run overheads, which are 3,080,000, and the cost driver has been given to us as machine hours. So I'm going to begin the short-run variable costs, and then I charge them to the four products. Okay, I'm going to charge the short-run variable cost, the hour for products. Therefore, going back to our computation schedule, I'll begin by bringing in our first overhead, which is the short-run variable overheads. And I'm going to make use of working number 1 to show how these are allocated to NOMI, STAR, OMO, and JIC. Of course, we have seen that the total overhead, if you look at our question, the total overhead is 3,080,000. So as I charge the overheads to the different products, I'm going to aim a total of 3,080,000 in that column there. So straight away to our working number 1. So moving to my workings, this is a separate sheet that I've reserved for my workings, and of course I'll give it a very small title, workings, and of course beginning with working number 1 that I'm focusing on the allocation of the short-run variable costs or overheads to our 4 products. So I'm giving you just an opening remark here, or just what I may call a tutorial. And of course, in this tutorial, I'm saying that the short-run variable overheads are driven by machine hours. Therefore, these overheads shall be charged to products on the basis of how the products consume the machine hours. And of course, I'm saying that the absorption rate is thus determined as below. So when you look at our question, the short-run variable costs are driven by the machine hours. Just to take you back to the question. So as you can see in our question here, we are told that the short-run variable costs are driven by the machine hours. The cost driver are the machine hours. So I'm going to determine my absorption rate basing on the machine hours. So going straight into our computation here, we are saying that the overhead absorption rate is going to be the total short-run variable overhead cost divided by the total machine hours. So we want to know what is our total short-run variable overhead cost. So going back to the question, as you can see, the total short-run variable cost is a figure of 3,080,000. It's a figure of 3,080,000. So that's what I'm going to put in my formula here, 3,080,000. And then the next question is, what are the total machine hours? What are the total machine hours? Going back to our question, we are told that NOMI requires 1 machine hour and the number of units are 10. So that's what I'm going to take to my formula here. We have in the brackets here, I'm going to include the 1 machine hour required by each unit of NOMI times the 10 units of NOMI that I have to get the total machine hours. Next, we move to star. Okay, we move to star to pick the information for star from our question. So for star, we are told that each unit of star requires 3 machine hours, and we have 10 units of star here. So that's what we are going to take to our equation, our denominator, 3 times 10. Okay, that is what I bring here. So I bring the 3 machine hours times the 10 units, of star. Next, I move to the next product, which is OMO. Again, for OMO, I need to determine the total machine hours. So I go back to the question, and we are told that each unit of OMO requires 1 machine hour, and then we have 100 units of OMO. So that's what I'm going to bring to my equation here, the denominator here. So those are the 100 units of OMO times 1 machine hour that is needed by each unit of OMO. Lastly, we have jig. So I bring the information for jig here. Picking up the information from our question, we are told that each unit of jig requires 3 machine hours, and we are given 100 units of jig. So that's what I'm going to take to my equation here. So I bring in 100 units of jig times each unit requires 3 machine hours. Okay, so I get that one here. So next, I'm going to simplify in this equation, blank equation here. I'm going to simplify. Of course, the numerator will remain the same. That is the 3,080,000 to remain the same. So for the case of NOMI, the first one here, 1 times 10, that gives us a 10. Then next we have I add on star, so 3 times 10, that gives us a 30. Then I add on OMO, so I add on OMO here. So 1 times 100, that is the 100. And then finally we have 3 times 100 for jig, which gives me 300 machine hours. So all in all, we are saying that NOMI requires 10 machine hours in total. Star requires 30 machine hours in total, and then OMO requires 100 machine hours in total, and then finally jig, for the total number of units, we need 300 machine hours. So to simplify our equation further, our fraction, again the numerator has remained the same, 3,080,000, but the denominator, we have simplified it further, which comes to 440. And how do we get that? 440, we get 10 plus 30 plus 100 plus 300. Your calculator should be giving you a total of 440 machine hours. So simplifying our fraction here further, we have 7,000 shillings per machine hour, and that becomes our overhead absorption rate. So we are saying our short-run variable costs are going to be absorbed at a rate of 7,000 per machine hour. And as we have done in part A of our question, we shall present our computations in a very nice table here. So we are saying that the short-run variable overheads are thus charged the products as below. We are picking the information from the question and then feeding it into our table here. So we shall need a column that will capture the product. We shall need another column for the units. Another column will show the machine hours per unit. Then we shall have the total machine hours after multiplying the number of units times the machine hours per unit. We shall get the total machine hours. We shall include it in that column there. Then of course we shall bring in our 7,000 in this column, okay, and then finally we shall get the total overheads that are going to be absorbed or allocated to our products. So of course the different products we have Nomi, Star, Omo, and Jik as before. And as given in the question, we have 10 units of Nomi, 10 units of Star, 100 units of Omo, and 100 units of Jik. The machine hours given to us in the question, all this information is, I'm picking it from the question, okay? I'm not computing further. I'm just picking it from the question. The machine hours, we are told that each unit of Nomi requires 1 unit machine hour. Each unit of Star requires 3 machine hours, and each unit of Omo requires 1 machine hour. And then Jig, each unit requires 3 machine hours. Next, we need to include the total machine hours for each of the products. So of course 10 times 1, we get 10 machine hours for Nomi. 10 times 3, that gives us 30 machine hours for Star. 100 times 1, we get 100 machine hours for Omo, and then 100 times 3, we end up with 300 machine hours for Jig. So these are the total machine hours for each of the products, and therefore, as we've mentioned, that the overhead is going to be charged the products depending on the machine hours consumed. So the rate of absorption is going to be 7,000 for all the products, and of course, I'm picking the 7,000 from that very working. So it means that for the case of Nomi, which consumes 10 machine hours in total, we shall multiply 10 times 7,000, and then that gives us 70,000 shillings there. So in total, Nomi is going to absorb 70,000 shillings of the overhead. And then for the case of Star, we have 30 times 7,000, and that gives us 210,000. So what it means is that the units of Star are going to absorb 210,000 of the overhead, okay? And then next we have Omo. We multiply 100 times 7,000, and that gives us 700,000 shillings, meaning that the units of Omo are going to absorb 700,000 of the short run overheads. And then finally we have our Jig. We are going to, and then finally we have our Jig. We are multiplying 300 machine hours times the rate of 7,000, and of course my calculator is returning a figure of 2,100,000. So meaning that the total units of Jig, meaning that the 100 units of Jig are going to absorb 2,100,000 shillings of the short run overhead, okay? Our units of Jig are going to absorb 2,100,000 of the short run overheads. So these are the figures I'm going to pick up and now take to our ABC computation schedule. So straight away to the ABC computation schedule, under working number 1, I bring in, of course, as we have seen, 70,000 for Nomi. We have 210,000 for Star. We have 700,000 for Omo, and then finally we have 2.1 million overhead charge to Jig in total. So, and in total, as you may add up, I want you to add up and see whether these give us the total overhead we have seen in our question, given as 3,080,000. So, of course, my calculator is affirming this, and I'm getting a total of 3,080,000. So congratulations, you have managed to charge accurately the short run variable overheads to the different products using the activity based cost approach. So we move to the next variable overhead, which are the setup costs. And of course, if you look at our question here, told that the setup costs are driven by the production runs. The setup costs are driven by the production runs, and we are going to charge a total of 10,920,000 of this overhead to the 4 products. So straight away, going to our ABC computation schedule here, we shall indicate the examiner that we have worked out everything in working number 2. So of course we have seen this computation in part A of the question plus in working number 1. So I'm going to simply project a few things, because now you must be now practicing and ensuring that what I'm getting here is actually what you are also getting on your side. You should be now practicing and making your skill better. So just to project this, my working number 2. So in my working number 2, we have the setup costs. We are going to treat and charge the setup cost to the 4 products. So this is our working number 2. And beginning with a remark here, we are saying that the setup costs are driven by the production runs. As we have seen in the question, that the production runs are the cost drivers of the setup costs. Therefore, these overheads shall be charged to products on the basis of the number of production runs consumed by the 4 different products. The absorption rate is thus determined as below. So what we shall do, as we have done before, the overhead absorption rate, we shall get the total overhead, which are the setup costs, and then divide that by the total number of production runs. So according to the question, we are told that the total setup overheads come to 10,920,000. And then, of course, to determine the number of production runs, we are getting the production runs of NOMI, which are 2 production runs, the production runs of STAR, which are 2 production runs. We add on to the production runs of OMO, which are 5, plus the production runs of JIC, which are 5. My calculator is bringing a figure of 14 production runs. So these are our production runs that I'm dividing with the total overhead, the setup costs. And definitely my calculator is returning a figure of 780,000 per production run. So the meaning of this is that each of our products is going to absorb 780 per production run consumed. So going to the next slide. So I'm going to use a very nice table here. And that table, in the first column, I'll show the product, okay, and get the products there. I'll show the production runs consumed by each product. Then I'll bring in the absorption rate. And then finally, we shall show the total overheads that are going to be absorbed by each of the products. So, of course, our products are the same: NOMI, STAR, OMO, and JIC. And of course, the production runs, as we have seen, NOMI consumes 2 production runs, STAR 2 production runs, OMO and JIC will consume 5 production runs respectively. All right, so as we have seen the above computation, the overhead absorption rate, we have obtained a figure of 780, and of course we are going to now multiply the production runs by the rate. We're now going to multiply the production runs consumed by the rate of absorption. So for NOMI, we multiply 2 times 780, and my calculator is returning a figure of 1,560,000. I'm maintaining the 3 zeros up there. STAR, the same thing, the same figure will work for STAR, that is 1,560,000. OMO and JIC, the figure, this is a 5 times 780 for both of them, and the figure is 3,900,000, maintaining the 3 zeros on the top of our column there. So these are the figures I'm going to pick up and take to my ABC computation schedule, and therefore I take you straight to my ABC computation schedule here. And of course, I bring in 1,560,000 for NOMI, 1,560,000 for STAR, and both for OMO and JIC, I bring in the 3,900,000. So in total, if you make use of your calculators and add all these figures here, you'll find that we have indeed allocated the total overhead of 10,920,000. Next, we move to the scheduling costs. I've worked out the scheduling cost in working number 3, and straight away taking you to working number 3. Working number 3, which are the scheduling costs. And again, here I mentioned that the scheduling costs are driven by the production runs, as you have seen in the question. Therefore, these overheads shall be charged to products on the basis of the number of production runs that have been consumed by the products. The absorption rate, which is similar to the one we have seen in working number 2, is determined as below. So the same formula, you are now experts, you know we shall get the total scheduling cost divided by the total number of production runs. We have already got the production runs, the total, which were 14. Your calculator should have given you 14 production runs as before. And to simplify that fraction, we get an overhead absorption rate for the scheduling cost of 650. Each product is going to consume 650 per production run consumed. So of course, as we have done before, I will still simply bring this forward. And here we are saying that the scheduling costs shall thus be charged to products as below. So borrowing from working number 2, the same products, Nomi, Star, Omo, and Jig, the same production runs. However, this time round, our overhead absorption rate is 650. So I'll bring my 650 there. So I'll be multiplying the production runs with the 650. And of course, your calculators should be giving you 1.3 for both Nomi and Star. That is the 2 production runs times 650 for both Nomi and Star. And for the case of Omo and Jig, 5 times 650 should be giving you a figure of 3,250,000. So these are the figures that you're going to pick and take to our ABC computation schedule. So my working 3, I bring in the scheduling costs here. That is 1.3 for Nomi, 1.3 for Star, 3,250,000 for both Omo and Jig, and indeed we have allocated the total of 9,100,000. If you try to use your calculators and add up and see whether we are accurate there, 9,100,000 has been allocated. All right, finally, we move to material handling. The last, if you look at our question, our last overhead cost are the materials handling costs of 7,700,000. Again, it is the production runs. So, of course, I require you to do this. Try this one out and see what you're going to get. So I'll simply give you just a projection of what you're supposed to get, so that you can test your skill. So beginning by, of course, giving your working number 4, material handling. Try. All right, material handling. And it would be better in the examination if you gave this kind of remark that the material handling costs are going to be driven by production runs. Okay, as I've done before. Therefore, these overheads shall be charged to products on the basis of the number of production runs consumed, and therefore the absorption rate is thus the time that follows. Okay, so try, just go ahead of me. That formula should be the one you're using right now. Overhead absorption rate, total material costs divided by the number of production runs. Okay, you should be ahead of me. The total material costs are 7.7, and I advise you run this video. You can pause and run it after. Okay, run the solution after, test whether what you're getting is the same as what I have here. So the total material cost is 7.7. Okay, bravo to those who are getting the correct answers. Bravo. You can continue. Okay, all right, the same thing. Okay, 7.7 divided by 14. Okay, all right, I can see you getting the correct answer there. The overhead absorption rate is 550. Congratulations, those who have got the correct answer there. Congratulations. Continue, please. Continue to get to allocate now. So you must say the material handling costs are thus charged to products as follows. Okay, all right, that should be the table. Congratulations, that should be the table. Bring your 550 in that column. Okay, now multiply 2 times 550. Okay, for Nomi and Star, Omo and Jig, multiply 5 times 550. All right, congratulations. Okay, 1.1 for both Nomi and Star should be the answers you've got. And then Omo, you must have got 2,750,000, which is the same figure that's going to work for Jig. And I know very well you've picked up these figures and taken them to the ABC computation schedule. Okay, I know you have already done this. Of course, you've indicated to the examiner that you're working that in working number 4. Yes, those are the figures. Congratulations. And yes, congratulations to all those who have tried. For material handling costs, you have got 1.1 for Nomi. Star, you have got 1.1. Omo, you have got 2,750,000. Jig, you have got 207.50. Those who have got challenges, please just rewind back this video and try to see how I've worked this one out. So next, we determine the production cost. You can work this one out. Your calculator should be giving you 4,280,000 for Nomi, 5,120,000 for Star, 13,100,000 for Omo, and 21,500,000 for Jig. All in all, as we did before in part A, we had a total of 44 million right there. So we proceed, because this is for all the products in total. For Nomi, this is for 10 units. For Star, this is again for 10, and this is for 100 units for both Omo and Jig. So we want to know, as required in the question, what is the unit cost for each product. So here we bring our production cost, and of course the number of units produced for Nomi are 110, and of course I'll divide the 4,280,000 with the 10, and that gives me the cost per unit of 428,000. I do the same for Star, the 10 units, divide the 10 units with the 5,120,000 total production cost. I bring in the 10 there, you must be getting 512. You do the same for Omo, the 100 units, the 13,100,000 divided with the 100 units. That should give you the cost per unit for Omo, and definitely for Jig, which is 21,500,000 divided by 100 units, and that should give you 215 cost per unit of Jig. So congratulations, you've managed to fully go through the activity-based costing method, and therefore I encourage you to now move to the next lecture, which is target costing.